Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike York. Today is Wednesday, November 10th, and don't forget tomorrow is Veterans Day, so we probably won't have a Daily Market Report for tomorrow as there's really no economic news releases scheduled for tomorrow, being a holiday, federal holiday. So let's take a look at what we have here. We have they show the mortgage back applications going upwards a little bit, so that's kind of good news. It means that people are either refinancing or buying. We got the initial claims. This is one of the news we've been looking for. That's normally brought out on Thursday. Dropped down to 435, so that's nice to see it drop below the 450 level, but still not in the range we still need it to be. But again, it is a definite improvement. Trade balance is a little bit less than what they were expecting. We had 46.5 billion before, and that was actually, and the consensus was about 44.8, so it's a little bit less than what the consensus was saying here. Export prices kind of shot upwards 0.7%, so that's also creating a little bit of concern. Import prices were down. When you take out the oil, when it was with the oil, it was up quite a bit actually. And then crude inventories. These aren't really necessarily. The Friday will be one that they're going to be watching at is the Michigan sentiment, and then later today at 2 o'clock East Coast time, 11 o'clock West Coast time, the Treasury budget will be released to see how much of a hole we are currently in. So it looks like they're looking to see it cut down quite a bit. So that would be so the previous month was at 176 billion in the hole, where now they're kind of projecting close to about 140 billion. So let's hope that we're on the right path to kind of that treasury budget deficit. So, anyways, let's take a look at the bond market here. And there was a little bit mistake on my part here yesterday. There's, where I usually kind of gather my information. It didn't relay right away in the morning about a bond rollover. So there was a bit of a bond rollover. This actually should have probably been closer. We'd normally probably be would have a downward trend. We had probably about 50 basis points drop, so still quite a bit. That was a complete sell-off, and we'll go into the explanation in a moment. But we had this most of this would have been started up here, but down because there was about 27 basis points, from what I understand, the bonds rollover. So we had the bond rollover. That's why this drop isn't really as big as we thought it would be. And then today we're actually down about 31 basis points for the morning. Yesterday, part of that was a big trade. A trader locked in a bunch of bond as a looked like it was a hedge against the bond market and kind of created a panic amongst them. So it was a big sell-off in there. So he was kind of a big money manager and hedge fund manager, and kind of set off some alarms, and everybody started selling off on his contracts that he had hedged against. The also some stuff technicals in the news is that stuff that should be, again, these are going to be, looks like should be corrections. We should be going dramatically downwards like it's showing. These should be corrected probably over the next few days, so I wouldn't panic for those who are kind of watching the bond market. And those who are watching the bond market are primarily people who are looking at mortgage interest rates like myself, the mortgage planner. But we got China, who's dramatically trying to slow down their economy, putting caps and new in there, and then also they're looking back in Europe again. The European news is coming out again with Ireland in dire straits regards to their bonds. Portugal is demanding more yields against Portugal and their bonds. So a lot of people are kind of steering away from the bonds over in Europe again, like we were kind of saying, would start back around May. This thing was going on there. Traders are also kind of seeing that maybe there might be not so much productivity going on with the new G20 format going on out there. There's also some possible inflation concerns regards to, again, this quantitative easing. The second round that came out last week, a lot of people still are unsure if this is really beneficial, or there's a lot of critics out there. Some people think this is another bubble waiting to happen, with creating this liquidity and creating some assets that will explode in the near future and put us into another crisis. So, again, this is going to be some interesting information down along the lines. You guys have a great day, and anything else change, I'll let you know. But again, I don't anticipate this seeing this trend keep going down here. I would anticipate it would kind of correct and improve itself over the next probably maybe even next week since we got the holiday this week, or maybe Friday, maybe going into safety to Haven, safe flight to Haven on Friday. So that might be a possibility as well. But you guys have a great day.